Report is international financial institution and global corporation. At the end of the course of student should be able to know whether a state alone can stand independently without involvement in any international financial institutions or seeking help from a global corporation. To be informed on how the World Bank obtained its fund and utilize the same in the operation of needing internal governmental organization effectively and efficiently, and its recovery once one expanding state cannot be able to pay debt within the contract's period. The fortune now as the relation and connection of international monetary fund with the World Bank and their difference in supporting developing countries. International financial institution IFI influence greatly to the developed thinking and practice in recent decades. The paramount influence was the direct effort of volume financial transfer and the indirect impact of the resources transfers of others, including donors and the private sector. The most significant contribution of the IFI was its analyze and ideas that dominate the aspects of development strategy and ideology. This section includes the Bretton Woods Institution, the International Monetary Fund IMF, and the World Bank. Arguably, no development debate can take place without talk of the Washington Consensus and IMF conditionality without reference to the number of people living below the poverty line according to World Bank data, or more recently without discussion of how IFM leaders are select the rules of the IMF. Developing countries' economies have had equal relations with the International Monetary Fund IMF. Developing countries have been short of foreign exchange exposed to commodity price fractional and prone to balance of payment crisis, and thus have been complete to take advice without agreement. Such a crisis is less experienced by developing countries. For example, the anti-involuntary program of the government of Vietnam in 1989-90 was designed with found advice but not a single penny of IMF or bank resources. Since Vietnam was blocked from Bretton Woods membership until 1993, the admonition to follow prudent macroeconomic policies has been largely accepted in most developing and emerging market economies, and the positive roles of the fund in this trend is hard to ignore. An external factor is a great influence that varies internal and external economy. This is very obvious in the present time of experience in all nations in the world. The statement of the standing alone independently without globalization is false. The reason was that although found programs are the short duration, their impact could be long lasting. In 1994, effective credit lines helping Brazil avoid serious damage after the Tequela's crisis and bailout of serious banking failures in the Thailand were also will manage, of course, strong fundamentals less the pain of IMF interventions. Large countries with sound underlying institution and strong international political banking got more generously constructed bailout programs and better trade-off between short-term adjustment and long-term development. So yun lang po. Thank you for listening for my report.
Hi everyone, our topic is the comparison of the World Bank. 1. The International Bank for Reconstruction and Development. The IBRD provides loans in market rates of interest to middle-income developing countries and credit-worthy lower-income countries. Number 2. The International Development Association. The IDA, founded in 1960, provides long-term, interest-free loans, technical assistance, and policy advice to low-income developing countries in areas such as health, education, and rural development. 3. The International Finance Corporation. The IFC, operating in partnership with private investors, provides loans and loan guarantees and equity finance to business undertaking in developing countries. Number 4. The Multilateral Investment Guarantee Agency. The MIGA provides loans, guarantees, and insurance to foreign investors against loss caused by non-commercial risks in developing countries are provided by the MIGA. Number 5. The International Center for Settlement of Investment Disputes. The ICS-ID, which operates independently of the IBRD, is responsible for the settlement by conciliation or arbitration of investment disputes between foreign investors and their host developing countries. The World Bank relation to UN. The World Bank Group has a treaty-based relationship with the United Nations that dates back to its founding and works to build a partnership that supports member states and contributes to effective development outcomes while preserving the distinct mandates of each institution. Thank you for listening.
Good morning, ma'am. Good morning, classmates. Our topic for today is all about international financial institution and global corporation. So, what is global corporation? Global corporation, corporates expanding businesses globally and not domestically operating, are called multinational company. It offers several advantages to its business transaction but possesses logistical and cultural challenges. So, global corporation is a large company that operates in many different countries. And also, global corporation in a sense are multinational corporation having a many units operating in overseas countries. So next, global company firmly observe its regional local culture. A company that's engaging in the global competition still observes its offering and processes consistent with the local culture. The product is consistent, but messaging must adapt to work within the cultural norms. For example, a significant soda brand can set up shop in different countries, but the recipe does not change in the global model. Marketing is where the two models are difficult to distinguish. Next is shifting a product from global multinational. A global soda that is brought to the global market without change its local ingredients. Offerings and process for delivering the product to market is the same in each country. Distributing the power of the product and process to be arm of the business manifest of reducing control from the central location makes it multinational. Next is the three channels of development of assistance. So first is government and related aid agency. It largely provide grants and some loans for development assistance and humanitarian aid. New actors like foundation are also becoming more prominent aid. It is an organization that provides money or assistance to people who have been affected by natural disaster, war, economic upheaval, or other conditions that prevent self-sufficiency. Second is Multilateral Development Bank or MDB, public sector arm, like the World Bank and the public arms of the regional development banks, which provide development loans and some grants to the public sector, sometimes including state-owned enterprises. Most MDBs provide financing in favor of private enterprises, investing directly or indirectly in local form. Third is the Bilateral Development Financial Institution or DIFS and the private sector arms of the multilateral development banks. Provide financial products and related advisory services to private sector and developing countries. DFIS are the either independent institutions such as Netherlands Development Financial Company or FMO or part of a larger bilateral development banks. They are usually majority owned by national government and source their capital from national international development funds or benefit from government guarantees. So next is the role of private sector oriented IFS in addressing private sector challenges. Private sector-oriented IFS addresses private sector's challenges by providing finance and knowledge and catalyzing others. Private sector-oriented IFIS or International Financial Institution are the interface of public and private sector with a unique mission and perspective that allow them to provide a special role in the project. Number 1, providing financial products to private companies that lack sufficient access to private source. IFS may be able to bring the funds configuration for which the private sector has no risk appetite at present. 2. Providing related advisory or technical assistance products to extend the specialized and scarce knowledge essential for effective investments such as A. Improve the investment climate, B. Strengthen probation and proper risk sharing, C. Facilitate probation and proper risk sharing, D. Enhance environmental, social, and corporate governance effectiveness. 3. Providing comfort under challenging environments to catalyze or help bring in financing for investors. Comfort comes when IFIS help mitigate a number of risks, including country risks, for example, currency convertibility, breach of contract, expropriation, or other non-business events that threaten company operation, and also project risk through due diligence and standard setting the FIS provide with respect to the project sponsor and the company's environmental, social, and corporate governance procedures. 4. Demonstrating the viability or private solution in difficult or new areas leading to further investments, and creating or developing new market, frustrating safe innovation. Innovate IFI transactions can also help push the reform agenda, facilitating further investments. Number 5, networking. Helping firms to know other firms, banks, IFIS, and the like through together. IFIS work with firms in situations when alternative financing is scarce but good projects are still done improve with adequate finance and advice. So next is finding high development impact invest areas and approaches. high impact focus areas. Many FIS or international financial institutions have been chosen to focus on strategic areas where they can high development impact and that also reflect their particular strengths. The focus areas of variation FIS provides complementary strengths that can be leveraged through partnerships. So we have 4 of them. So here include some of the factors that have influenced various FIS in choosing their strategic areas. First is growth, such as infrastructure, access to finance, education, trade, innovation, regional integration, and the investment climate. 2. Affect the poor, such as business models and specifically target service and employment for the poor. Exclusive business model or base of the pyramid programs. Infrastructure, health, and education investment like to benefit poor population. 3. Major global trends suggest that need to significant investments such as food security, urbanization, water scarcity, youth employment, regional integration, and the climate change. Lastly is the large gaps, the availability, commercial finance. With SMEs based of the pyramid project, new public and private partnership models in the lower income and fragile countries. Another, these the factors and then considered in the regard to the particular strength of each FII and the particular needs of the individual country, taking into account the level development, country development strategies, and the private sector gaps. So that's all. Thank you po and God bless.